Good morning or good day. It's Friday, 26th of October 2018. Welcome to our global webinar, Real-Time Daily Trading Ideas. We have 5 days a week, 5 different traders. We will speak about trading ideas, strategies, market screen, maybe 1 or 2 questions from your side, directly answer in our webinar. Our goal is quick and smart, so let's have a nice start like every day. And like every day, we will start with our risk disclaimer. Forex and CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. If you are a starter, please start with a demo account and make yourself familiar with long trading, short trading, leverage trading, and your personal risk management. If you'd like to read the full risk disclaimer, just visit one of our web pages, for example, admiralmarkets.com, and you will find the long version and all more details there on our web pages. For example, also our key information documents, the kits, and information about 2 different client categorizations, retail clients, professional clients. If you are in the European Union, since August 2018, there's the ESMA regulation in force. Since then, retail clients will get a maximum leverage up to 30 for Forex majors, for index CFDs up to 20, and only professional clients, if they eligible, can still get a higher leverage up to 500. A picture shows more than 1,000 words. Margin requirements and the leverage goes hand in hand. So DAX 30 or euro dollar, the margin requirements is quite different compared retail clients and professional clients. But of course, there are also some benefits only retail clients have. They get an unlimited protection against negative balances. Professional clients don't get that via regulation. But some brokers and also, of course, Admiral Markets have an additional protection. Also professional clients, we call it negative balance protection policy. Here, also professional clients get protection up to 50,000 British pounds, what is around about 7,000 euro. More details about retail clients, professional clients, the differences, the different regulation, all the other stuff you will find on our webpage. Here you see the specific link. This is me. My name is Jens. I'm the German guy from Admiral Markets. We are an international big Forex and CFD broker. We have over 18 country offices. So I'm talking from Berlin. My English made in Germany, but I'm not the main speaker. The main speaker is the day trader of today. This is our scheme. On Monday, it's Jay's day. On Tuesday, it's Paul's day. On Wednesday, it's Giancarlo's day. On Thursday, it's Marco's day. And like today, on Friday, it's Dirk's day. Our leading day traders live every business day, every trading day to the same time. It doesn't matter if you're retail client or professional client, anybody gets the same spreads. For example, DAX 30 or also euro dollar, typical spread of just 0.8 points of hips during main trading hours without additional commission. Also here, check all the details out, for example, on admiralmarkets.com. Or you can contact us, call us, send us email, or visit the other channels like YouTube or Facebook. Everything, of course, is linked on admiralmarkets.com. And don't forget, we are a global player, one world, global offers. So if you are anywhere in the world, check out your legal entity of your choice, and everything on our webpage is to find. Now, time for our day trader of today. This is Dirk. Good morning, good day, Dirk. What's your view to the markets today?
Yes, good morning, Jens. We, of course, first of all, need to transmit the screen. I'm kind of a bit of, let's say, crazy this morning due to the fact that I spilled coffee over my keyboard. So that Friday started a little bit of crazy for me. So gotta work this out the next hours. And hopefully this will work again. Okay, so don't do that, guys. Hopefully you're doing it better. So this morning we will start with first view on the euro-US dollar rate. As you can see, there's a small buy-in here. Already put the stop loss on the entry, which is around the 113.70. And if you look at the current longer-term picture, I will just close that board here and just to maybe widen that picture for you guys. Delete this blue box here because it's obvious that this blue box is the year low, and you guys will see that we still are getting very close to that year low around 113.01. So why? There is a long scenario right now. Well, it's kind of, let's say, luxurious because the stop loss is already put on the entry, so we won't lose anything, besides the fact that it is a small position, of course. But that is absolutely the way you should trade the markets right now. If you look at indices, if you look like stocks like yesterday, like Amazon or Google or whatever, Alphabet, let's call it Alphabet, the market is very volatile, and you better be breaking down position sizes, or otherwise maybe you get just dropped out of your account. Possibly don't do that. Okay, so what is going on with the euro-US dollar rate? If you look at yesterday's ECB decision, like everybody expected, nothing big happened, and that was the thing to be expected, because they already said that a long time ago. Rates won't be changed until summer or even above summer 2019, which is really a tragedy for all you guys and me as well. Because we don't get any interest. What is going on with the euro-US dollar rate in the coming month? That hasn't to be the fact that the euro-US dollar is only tanking and going to the downside just because of the interest rates. Just think about trade balances. Think about the trade balance the last month and the whole year 2018, and you see that the trade balance, for example, between the US and the Eurozone is still favoring the Eurozone. And don't forget that we still have much more guys living here around and making businesses than the US has. So there's a lot of trade going on besides the fact with China and so on. And that has an effect on the currency rate as well. So that means that in the current month to come, it hasn't to be ending downside in direction 112, 111, 110 or wherever. It could go back to the 61.8 level, which we see first of all here. Let's just insert a horizontal line here. And of course, going back up in direction of some old highs, which we see around the 38.2. This is nothing to be done in a couple of minutes, days, hours or days, of course, but we are speaking about the next month to come until year's end, possibly. So it doesn't have to be the fact that we are only going to the downside. If so, of course, during the long-term analysis from the Fibonacci analysis as well, Fibonacci analysis will be turning upside down, of course, and will go from the last year's low, 113.01, to this kind of a high, which is around 118.15. And if you just squeeze that chart and go down to the projections, you will see levels like are already pointed out the last times from 138.2 level and 161.8 level, which is very close to the 110 handle. So that's just for showing you, you guys, where the possibly targets to the downside are. So let's see what will happen the next hours to come. This trade is just placed, and if it goes bust, so what? I'm just telling you, a couple of big investment banks are already long as well. On one position I saw was even entering at the beginning of October, which is kind of crazy because they started going in at 115.50s, and their stop loss is at 113.25. So 113.25, kind of interesting if that kind of a stop loss gets squeezed, gets just knocked out, and possibly will be scratching the year's low again, or a little bit above that, and will be going up. So that could be some kind of a possible move next hours and days to come, possibly even today. You never know. Going back to a couple of markets, of course, because there's our DAX, German DAX. First of all, let's see, where's the DAX board? I opened that one already. Okay, here we go. Implemented those Admiral pivots, and if you look at today's low and yesterday's low, the new, kind of refreshing my other board here as well, just hold on a second, that the current low, current today's low is 11,083.51, so that's the Xedra low of today, and yesterday's low was at 070, let's see, 078.37, so we delivering you that board here as well. And when you see the Xedra DAX year high was at 13,596.89, and the year's low right now from yesterday was 11,078.37. So if you count that move already is approximately 18.5% from the upside to the downside. So that's a little bit more than just a little correction, right? So we are getting closer to the crash levels. Let's talk about that between 20 and 25% from down to the downside. So if you see just from technicals, if you see that pivot point is at 11,237, and if you see resistances, they are quite they are looking right now. They are looking like they are not reachable today. Markets are very volatile, and markets are trying to let's get stable. It's the talk out there, just to be more protected that the level of 10,800 is not getting stretched too close, because if it breaks down there, it is a nightmare. So supports is extremely interesting here. Supports support 2, for example, is a little bit underneath the 11,000 marker. So we are already scratching the 11K. This morning's support 1, of course, is right now the first interesting resistance, because we are coming from the downside to the upside right now. So that's the first target for the bulls. And you need to be getting down this marker just to think about more way up. If you look at EMAs, so exponential moving averages, the 100 is at 12,201, and the 200 is at 12,363. That one is going to be marked from 10:30 CT today, so it's not too old. If you look at gaps, as we do, and as we did the last time as well, you have still one Xetra DAX gap, the old one, which is still open, and you got a new one from the 22nd to the 23rd of October. And if you see that, that's approximately a 100-point gap, more than a 100-point gap. And that, of course, needs to be closed, just from the Xetra perspective, not talking about the future DAX, of course. Okay. So that's from the kind of numbers, and maybe that's getting interesting if you look at the longer term chart, and if you, for example, look at the weekly chart. And I'm going to insert a couple of trend lines here first, because before you're going to detailed analysis, just have a descending trend line, sorry, from this perspective here. Let's see if that works out. Yes, and let's just have a ascending trend line from the perspective here. And we need to be checking out these levels are not correct. Let's see. Yeah, if you see the longer term, let's see if that is going to be the fact right here. And the next one should be this one here. And now we're going back to a much more detailed daily chart, squeezing that one. And of course, measuring out these ones with horizontal lines that just you guys may see where we are hovering around there. So if you move that to the downside here, it's very close to that support 3 and a little bit around that support 3 and support 2 levels here. And if you're going to the next days, we are pretty much hovering around this 10,800 marker. A lot of analysis out there is going to say that there is a move down to that very close line to 10,800, which would be a swing to the upside, a possible swing scenario to the upside. So if we still have some patience out there, if we still are able to wait and see for a longer term swing, I'm speaking about a couple of weeks into the year's end, we could mark that as a so-called trading box, just from a swing setup, and not from the day trading scalping perspective, of course, just from the swing trading perspective. So that could be a nice scenario, that this move is going into this box and trying to get stable around that 10,800 handle, and going back up in direction to the descending trend line, which is room to possibly 12,000. Of course, right now from the fundamentals, it doesn't look like that, but just from the technicals and from the swing, and possibly from some kind of Elliott guys out there, you can count, of course. And you may just see that there is room for a little move to that upside here as well. Okay, doing some Fibonacci's here. Besides that, just checking out the last levels from this downside here to this upside. Of course, going more into details with the 4-hour chart here, squeezing that one here as well, so that you guys may see a little bit more, and just placing that one at the last high. And right now we are stretching and moving around this 161.8 level. So this is a so-called fight zone this morning, and if you see that from the daily perspective here, this might be a level to defend. And if you see the blue line a little bit more down there, this is the pivot point, no, support one, sorry, from that perspective here. So between 11,100 and the year lows, very close to that 11 handle, this is the level to protect and to be defended this today. So not only 11,100, I would speak about the 11K marker, so the round number, the round magic number of 11K, which is very close to that. Remember, Xetra DAX support I showed you from the support 2. Okay, so going back to a board, to the Market Watch, and looking at a couple of other stuff. We spoke about natural gas last week. Just having a look at this, it did not move down yet. So we are on the move in direction to our 2 trade lines here between the 313.6 and 315, let's say, and the 305 levels. I told you guys about possibly stepping in back in for a long setup. So that's not happening yet. So we will skip that one. And we spoke about, where is it, about the Kiwi. A couple of trade scenarios from the Kiwi at the last days. I did the same here via, for example, guidance, FX Dirk, you will find that stuff. And still trying to get hold of this last low here. We'll mark that here as well with a horizontal line, which is very close. What is the level? It's 0.64, let's see, 0.6426. 0.6423.5, so that's a year low, and we are going to get to the downside here, possible re-entry around that zone, or already in there, and maybe with a first step and with the second step around that year's low. You can try it with a first small position size of, let's say, with a mini, and double the mini later on, but not doing more. Or you, of course, could wait and do that with a pending order, stepping in a little bit above that 0.6423. So let's say at 1.6430 or 40s, which is not very far away. Okay, so this is another single stock stuff. I looked at Amazon yesterday, and possibly you guys did the same, because markets reacted kind of nervous and kind of crazy after an Amazon reported quarterly earnings yesterday night after the market close in the US. And the numbers are still tremendously big. If you see the billions earned and the billions of revenues, but the market expected more. And if the markets and the analysts expect more, people are maybe possibly disappointed, and that's the fact what happened after hours. So that will drop here. Doing that in a bigger scenario here, you see there is some kind. Let's see, it's almost looks like a little bit of a double top stuff here. And if you look to the downside here, right now they try to defend that kind of a level. And still right now it looks like a double bottom, but we are not speaking about bottoms in this kind of a market scenario right here. It's just a wish. Possibly this bottom, this so-called bottom here, could be getting knocked out in the next hours when markets in the US are about to open. What is going on with Fibonacci's? That is maybe a kind of interesting scenario. If we just go the short-term scenarios, just check out where possibly scenarios are played around that 61 handles here. I'm leaving that short-term here. And if you just go back to longer-term scenarios, you will see a couple of these lines, a little bit more to the squeeze like this here, and that's the right here. And you will see that there's this kind of level to the downside here. There's still room until 161 again. So I will just mark a couple of possible numbers where just to hit the button, where just to possibly re-entry in that kind of a stock. Just from the technical perspective and nothing about the fundamentals right now. You guys know that for companies like Amazon, it is extremely important to look at the final quarter, because the final quarter has huge numbers coming in, usually from Thanksgiving, Black Friday, stuff like that, and of course the Christmas business. So this is a very important season, and if Amazon is giving something like a little bit more disappointing forecast for that last very important quarter, that might be giving you impression that they are calculating with maybe bad numbers. So just a rumor, of course, but something could just cook up there. Okay. Just giving you these numbers, those three step-ins very close to that 1600 handle and going down to the 1550s. Okay, another stock looking like Swiss cheese. I always spoke about that because it looks like Swiss cheese with a lot of gaps here, is the Bayer stock. And as you guys know, there are a couple of issues for Bayer here since they bought Monsanto in US, and a couple of guys are suing Bayer just because of that glyphosate, it's called glyphosate, and a couple of products which are using that stuff. And it looks like that Californian court did not do the thing Bayer was wishing for, and so they still have to pay millions to that guy suing Bayer because of using that stuff. And in a couple of next weeks and month to come, and later on, that will have a heavy weight on Bayer's purse. So that might be getting really ugly. So just to be sending out a warning like that. If you look at the last low and the last high here, we are scratching that 138.2 levels. If you look at the longer term scenario, from this last low here to this last high here, I'm just changing the colors, maybe just to not to confuse with all these lines, common and black as well here, just to separate a little bit longer term Fibonacci from the short term Fibonacci tools. And if you see that stuff, we are getting closer to a level of 261.8 where we possibly could re-enter for a relief move to the upside. So this is just a blue box here. I'm marking that one just for a possible re-entry here. Looking at indicators, if you look at the relative strength index from the daily perspective, that already looks like a nightmare. It is the third time Bayer right now is very close to that, very much oversold territories from the daily perspectives, even from the weekly perspective. So just from that kind of a technical indicator, it's getting interesting, possibly to speculate on a relief move to the upside here. Then there is another stuff indicators when you look at moving averages, so you can enter something like for the 100 and damn, totally got an error here. Where is this trend moving average? I took the wrong one. So there's the 100 moving average, which is in the color of lime here. We're closing that one just to have some more space. And from the daily perspective, of course, doing that with another moving average with a 200, just to mark that one with another color. Let's say, just do that magenta. So these two, you already see that there is a lot of room, possible room to the upside, even if you just would count up to the half of that move, going back to these old levels where the last high is coming from, around the 77s and around close to 80. I would say, even if it's very attractive to see there is this last gap here, if this is a speculating move to just speculate on a gap close, we would be on a level of, let's widen that picture here, we would be on a level of 76.50, which is still very attractive when you look at the current levels of 65, 66 euros. Okay, enough about this single stock.
We need to come to the end. The time is our limit. We're already speaking 25 minutes, but that's fine. 15-20 minutes is our goal, and usually we all the time make some minutes more. But if it's worth to do so, we do so, and that's we did. Tomorrow is another day, but like my running gag on Friday, tomorrow is weekend, so I already wish you now to an early hour a nice weekend. The next live webinar with real-time daily trading is on Monday. On Monday, it's Jay's day. Jay Metro is more about the institutional Forex view. So if you'd like to learn and see more about the institutional Forex view, just visit us on Monday to the same time. Thanks to Dirk. Greetings from Berlin office to all. And if you'd like to see and watch this again, couple of hours later, it will be available on our YouTube channel. Just go to youtube.com/AdmiralMarketsFX. That's enough from my side. And the last final words from Dirk today.
Yeah, so see, I'm typing in the new year's low so far right now, 11.060. So we are getting very close to that 11 handle, as I told you. So maybe it's kind of interesting for you guys just to have a look at this support I draw out here. Around this 11 handle, and possibly trying a first step in around this level. Don't overdo. It's very close to the weekend. It's really making everybody sad if you step into a trade and losing money just in front of the weekend. Don't do it. Just step in with small position sizes so you won't be crying. And that's very important. From the everyday trading perspective, everything right now looks like a nightmare with all these extremely volatile sessions. But this is exactly the market how we want it to be, because when traders interact, they need volatility, they need good entry zones, and the market is delivering us a lot of chances right now. Okay, as Jens already said, happy weekend. Hopefully you guys enjoy a little bit of relaxing scenarios everywhere. And as you like, you'll be hearing us again next Friday, 11 CT. Thank you very much. Bye-bye.